Hi, this is Mateo Garcia, president of Mateo Mortgage Funding. I just wanted to spend a few minutes to discuss ARM mortgages, or adjustable rate mortgages. What an adjustable rate mortgage is just what it sounds like. It's a rate that has the possibility to adjust based on a few different factors. Some adjustable rate mortgages are usually started at a lower start rate, where the rate you have that current interest rate for maybe a 6-month period, 1-year period, 3-year period, 5-year period, even as long as a 7-year period. Then after that time period, the rate has the possibility to adjust. The shorter the time period the rate is, the lower the interest rate is, but then the more likely it is for the rate to adjust. For example, if somebody has what we call a 3-1 ARM, what that means is the rate is fixed for the first 3 years. Then after the 3rd year, the rate can adjust every year thereafter. So fixed for 3 years, adjust every year after that. And the rate can adjust up or down. Right now, with the current mortgage market, the trend is that the rates are adjusting upward. But there has been instances, especially in the last few years, where people took out an adjustable rate mortgage maybe 5-6 years ago, and they had it for a few years. There were some circumstances where the rate was staying the same or adjusting just slightly higher. Typically, an adjustable rate mortgage does have some caps or some safety features on it. What that means is, for example, if your rate starts at 5.5%, but it has a 2% yearly cap, what that means is no matter what interest rates do, when it's up for adjustment, the max it can adjust per year would be 2%. So if the rate starts at 5.5%, it could potentially adjust up to 7.5% or 7.5%. So one of the most important things to talk with your loan officer or mortgage broker about is what happens with that rate after the initial fixed rate period. So if you have a 3-1 ARM or a 5-1 ARM, what happens after that 3rd year? What happens after that 5th year? Then also, the rate usually is going to adjust based on what it's called a margin with the loan. And then there is some sort of index that the rate is tied to. It could be the Treasury average, the cost of saving index, the LIBOR index. So what happens when your rate is up for adjustment, the lender is going to take the margin on the loan, add the current index, and that's how they're going to determine if your rate is going to adjust up or down. What's happening currently in the mortgage market, adjustable rate mortgages have been slowly going up, but fixed rate mortgages, even though they're slightly higher than what they were a year or two ago, they are still historically at their lowest levels. Right now, we're recommending to a lot of our customers, unless they know for sure they're only going to be in this loan or this home a couple years, there really isn't a big benefit to go with an adjustable rate mortgage right now. For example, you can get a 30-year fixed rate mortgage today at 6.125%, but you can get a 5-year ARM at 5.875%. So there is a benefit. You're going to save 0.25% on the interest rate, but that 0.25% is a minimal savings compared to the risk associated with the rate potentially going up to 7% or higher after that 5-year period. An adjustable rate mortgage is still a good option to definitely consider, but right now with the current mortgage market, a fixed rate loan, even though if they are slightly higher, they're still just slightly higher than what an adjustable rate mortgage is, and for the risk associated with an adjustable rate, it may not be the best loan for everyone. So these are a few details regarding an adjustable rate loan. If you have any specific questions about your current adjustable rate mortgage, or have any options that you want to discuss about possibly considering refinancing to an adjustable rate mortgage, feel free to give me a call. My number here at my office is 480-839-6709. You can check us out online at 456loan.com. We have our current interest rates on there and many different mortgage calculators. Hope to hear from you all soon. Thank you.